Morning, Paul. Thanks very much for joining us on Blue Notes on the morning of the AGM for the bank. We'll ask you a couple of questions about the AGM, seeing we're doing it on that day, but then we'll give people a chance to get to know you a bit more. We'll have a bit of a longer discussion. But it's your first AGM. You've been on the board now for about a year, but it's your first AGM as chair. How do you feel the bank is positioned coming out of this incredible year and more looking into 2021? How comfortable are you with how the bank's set up?
Well, Andrew, thanks for the opportunity to do this. And look, people will know I'm a businessman. I've been in business a long time. I'm very much driven by the numbers and by the metrics and making sure that the strategy is delivering. So when I look at the bank and where it's positioned and how it's traveled through the year, I look at it with the eyes that question, how did we get to where we have? What has been the things that have delivered for us? And when you look at how the bank has traveled through 2020, what you see very clearly is two things. First of all, the work that was done over the last 4 years on the capital structure of the bank has positioned us in a very good place. We came into the crisis with a CET1 of about 11. We're actually coming out of it now, or coming out of the year rather, with 11.3. That didn't happen overnight. That happened by a lot of work by a lot of people over the last 4 years to be very selective about who we bank, to make decisions about disposing of assets, to think about what businesses we would invest in. But that did mean that we were able to avoid needing to dilute shareholders by going to the market, unlike two of our major competitors. And I think it's a testament to the work the bank did that ANZ did not need to do that and was still able to travel well through the crisis. The other thing I look at is the cost base. There's been a lot of work done on that over the last few years. If you look at our business as usual costs, they reduced by about 280 million in the year. Okay, we increased investment in IT and other things, but again, that reflects a lot of hard work, but it positioned us very well to travel through the crisis.
And looking at again from that shareholder perspective that you refer to, for many investors, health crisis aside, 2020 was a year when interest rates were incredibly low, the dividend was lower, capital growth was lower. For those shareholders, and a lot of them do rely on dividend income, how can you perhaps give them some insight into what dividend policy may look like going forward?
Yeah, and Andrew, I think we're very conscious in the board about the importance for our shareholders of a reliable and regular dividend and knowing it's sustainable. So it's not an easy decision to make to reduce the dividend in any given year. But I also like to draw the analogy that a boardroom, if you're a shareholder, you would want your boardroom to be kind of like the cockpit of an A380, where people are not just responding to immediate events, but to use the aviation phrase, they're flying 20 minutes ahead of the plane. And as a board, we're required to act in the long-term interests of the business, which ultimately will look after shareholders, customers, staff, and key parts of the community. So as a board, when we look at the decisions on dividend, what we're mindful of is the economic uncertainty we face. And the questions we ask are, have we got enough provisions set aside for potential losses that we might incur? And is the bank well provided for in terms of capital so that we can continue to meet our obligations on lending and on servicing our customers? So with the uncertainty around us, we felt it appropriate to reduce the dividend this year, and that was consistent with APRA's guidance. As we look forward, we will revisit this early in the new year, and I think the board will be heavily influenced by two things. First of all, what are we seeing as the pace of economic recovery? How are the economies coming back, and how is the outlook? And then second of all, we'll also be driven obviously by the regulatory guidance. What do regulators in Australia and New Zealand feel is appropriate, because they're always mindful, of course, of capital structure and of the sustainability of the banking sector.
And looking more broadly then at that, there is always, and it's a bit of a creative tension between the interests of shareholders, of customers, and indeed of staff. So as a chairman, as a board, how do you see that balance at the moment?
And I would argue, Andrew, there's not a tension. What there is a difference between short term and long term. In the short term, it may be that there are certain things people would like you to do, but if as a board you're acting in the long-term interests of the business, your decisions are very clear and they ultimately should be actually good for everyone. A great example would be the rise of digital banking and the whole rise of fintech. We put over $300 million last year into investing in technology at ANZ. Now, we could have paid that out in dividend, or we could have used that to bolster our profitability. But it's actually the right thing to do in preparing ANZ for the future. So whilst it may, in the short term, have some consequences, I do believe it's absolutely the right thing for everyone in the long term.
Another issue that we know is going to be very prominent today in the AGM, and has indeed been for a long time, is the shift in the world towards greater recognition of the need for a transition to a lower carbon economy. And indeed, ANZ has made some formal announcements about that, how they'll work with major customers to reduce carbon emissions. But it's a fraught topic, you know. I'm sure at the AGM there'll be questions on all sides. So how as a board how are you thinking about that?
Well, I've actually seen some of the questions that are coming in for this morning already, because some shareholders have lodged in advance. And you're quite correct, Andrew. We've got people on both sides of the divide. Some shareholders think we're moving too slowly and that we should be more aggressive in our climate policy. Other shareholders, and there's a significant number of them, feel we shouldn't be getting involved at all, and they think we're moving too quickly. The reality is, and I think I'm very similar to Shane and the executive team and to the rest of the board, I'm a businessman. If I wanted to go into politics, I would have taken a different career path. This is not about the politics of climate. It's a business decision. If you look globally right now, it's just so clear that the global economy is moving to a low carbon future. That's a huge opportunity for ANZ, because people will need to invest heavily to make that transition, and as a banker, we would want to take advantage of that. Likewise, it's a big risk, because as a bank, you must make sure you're not left with an overrepresentation of customers who do not have a transition plan to a low carbon future, and in time will be vulnerable to carbon pricing and to other risks. So for us, it's a commercial decision. We're having a conversation with our customers, those who've got the highest emissions, and working with them to develop these transition plans, and asking how can we help you invest to get to a lower carbon future. And there's obviously a lot more detail than that in our climate policy. Very interestingly, as we have those conversations, we've had over 83 of them now, our customers are actually in many cases ahead of us. They, even if they're in the resources sector, are already thinking about what does the future hold and what is appropriate for them in a lower carbon world.
Well, thanks very much for taking time this morning. It's obviously a very busy time of the year for the bank, but I'm sure our shareholders are very interested to learn more about you. So thanks for that time, Paul.
Thanks, Andrew. And look, thank you to the shareholders who've been strong supporters and borne with us through a very challenging year. And for staff watching this, look, you guys have done an amazing job. We've come through the crisis so far in terrific shape. Thank you for all your good work.
Thanks again.
Thank you.